All right, welcome and welcome back to everybody who's tuning in. You're watching Buy Now, Sell Now, and I also have to introduce Kunal, who's joining in. Kunal, thank you so much for taking the time as always. While we wait for us to go live on social media, I just want to ask you about where you see the Nifty levels right now. We've breached the 15,800 mark, something that we didn't think that was possible definitely a year back, right? So very quick view on that, and then I want a view. We've got a question coming in from Mukesh Baheti on Info Edge as well as IPCA Labs and MRF. But I would request you to comment on any two of them that you think are very, very strong at this juncture.
So we'll start off, first on the index view. Good morning, Alex. First of all, on the Nifty front, I think we are at an extremely buoyant zone for the indices. Every short-term dip, marginal dip, intraday correction has been bought into. So that's a very good positive for the index. Just about in terms of levels, I believe 2 days back when the markets had seen a mild intraday correction, those lows which were tested on that day now should act as a good support zone. So 15,550 to be more precise on the spot levels should be taken as a good support zone for the Nifty, and closer to 15,850 is where I believe that some short-term resistance could emerge on the index. On the stock specific which you mentioned, I think the only stock which I would be liking out of the names which you mentioned, the three names, I think has been Info Edge or Naukri. I think that stock looks extremely attractive to me on charts. The reason for that I think is very, very clear, because the stock had gone through a steady uptrend the last entire 1 year. It had risen up from almost 2,000 levels to 5,700, 5,800 zone in the last 4-5 months. From those 5,700-ish levels, it's corrected back towards 4,500 odd mark. So it's gone through a process of rally and a cool off, and this in effect has formed a bullish flag pattern for stock like Info Edge. So at these levels of 4,600, 4,700 where the stock is trading, I think it's a good level to start nibbling into the stock. And on every dip of almost 150 odd points, the viewer can look to add, specifically if he has a longer term view.
Good morning, Kunal. Our next viewer query is coming in from Ritesh. He wants to know whether he can buy June 1100 call of AU Small Finance Bank. So what should he do with this?
I would, I would look at this stock as a potential breakout candidate. Cheryl, I think the stock today is showing some fair degree of momentum. It's breaking past about that 50-day moving average as well. The only catch I would probably say is that look at these stocks or these set of stocks as an entire pack on Bank Nifty. So when Bank Nifty is going all guns blazing, when the Bank Nifty is going strong, and if AU Small Finance or AU Bank looks to be on a strong footing in that sense, then we can probably look at this as a more of a strong breakout candidate, because the sector is also doing pretty well. So on a day like today, for example, Bank Nifty was up some 200 odd points. It's ebbed off now, down 100 points, which means that the index is still going into a bit of a consolidation mode. So if you see these odd bit of rallies in stocks like AU Bank, when the index is not showing any kind of trend, they may fizzle out very, very quickly. So you may look to buy a call option, but then have a very quick and a nibbling kind of a trading framework over here. Look at it for just a couple of days of trade. If you get your your profits on a shorter duration of time, I would advise that you should book out profits pretty soon as well.
So the next question, Vikas, is for you, and it's coming in from Shanmuga Sundaram. He's bought Aarti Drugs at levels of 755, and this is a stock that has tripled over the last 1 year. And unfortunately for Shanmuga has bought at, if not the peak, then at elevated levels. He's asking if we should hold on to this investment, and therefore what I'm trying to get from you is there significant value that is still left in the stock and potential for gains?
Yeah, Alex. First, the investor has bought it at a higher level, so he need not worry because the stock looks fundamentally very good. And I do not know his acquisition price, but even if it's sitting on some losses, I think he should continue to hold on to this stock. Within the pharma sector, it's a quality company with pretty solid fundamentals, and I'm expecting it to rise substantially from the current levels. So my recommendation would be to hold on to the stock.
Alright, the next viewer query is coming from Sherry and wants to know about Alok Industries. She's asking if there is a very strong breakout on the charts. Can I invest in Alok Industries? Now is a question coming in from Sherry. Kunal, how is Alok Industries looking on the charts? That particular counter saw massive rally last year as well. So does it make sense now to look to invest in it?
Well, I would advise very strongly that you have to avoid these kind of names. It may look like more of a flashy trade because in the last 2 days, I remember tracking, the data on the stock in the last 2 days of the set of jump in terms of volumes, the jump in terms of delivery data for the stock. But it's very tricky because you look at the history of the stock. It's not an encouraging history. That the stock has shown because it has a habit of going through sharp periods of uptrend and at an equally sharp periods of downtrend or a sharp reversal as well. So you don't want to just about bet blindly on these kind of names. I think it's very prudent to have safety on your portfolio at these kind of levels. So I would advise that don't look at buying Alok Industries and such kind of stocks in your portfolio. If you're looking at it as an alternative, then I would probably recommend something like TCS or maybe Reliance or maybe an SBI as a much better and much safer and much more of a durable alternative for your portfolios.
Okay, let's take a view on Madison Sumis. I'm coming back to you, Kunal, on this one. We've got Neeraj Kumar, who's got 800 shares of Madison Sumis at levels of 245. He's asking whether he should hold or sell. He's looking for a short-term target and he's looking to hold for the next 3 to 4 months.
3 to 4 months you can look to hold on, but my only concern is with the very recent trend which has emerged for Madison Sumis that post I think if I'm not wrong it was results announcement which had happened for the stock 1 or 2 weeks back and it had jumped up from 235 to 40 levels to 270 275 and almost the entire rally has been reversed for the stock in the subsequent 1 week. So it's not an encouraging sign because when you typically see a rally and such a strong breakout, you would expect that max 50% of the retracement is what the stock should go through if there is any kind of a mean reversion. But if a stock has a capacity or capability to reverse the entire 100% of the recent rally, which means that the trends are not strong enough for the stock and the stock may take a lot of time to settle down. So I would sense that it may take some time for the stock to settle down. It may probably go into a range back below that 240 levels as well. So if you can hold on for the next 3 to 6 months and still look to average, assuming if the stock gives you any further correction, then I think it makes sense to hold on to your investments in Madison Sumis.
Alright, the next viewer query is coming from Santi on KIOCL, wants to know the views on investment in this particular stock. Looking for a target of around 30% gains on investment and it wants to know if KIOCL is a good investment idea and if not, if there's any alternative in the same sector. Vikas, what's your take on KIOCL? Makes sense to invest this with a longer term view. Our viewer has a target of about 30% gains from this counter. Is that achievable?
Cheryl, it's a good quality company. It's into iron ore. The name of the company is Kudramukh Iron Ore Company, and iron ore prices are shooting through the roof. The demand is also pretty high, and this has been reflected in the quarterly results which the company reported recently. But the stock has already trebled over the last 1 year, and from here on, I am, as I told you earlier, I'm bullish on the metal cycle, and this would certainly do well from here also. So one can certainly stay invested in this stock, and if one were to buy it fresh, then my conviction would be more on a stock like an NMDC. The only catch would be if the government comes out with an OFS, then the stock might give you an opportunity to buy at lower levels. But otherwise, NMDC at the current levels looks exceedingly well, exceedingly good from an investment point of view. The only catch would be one could use a staggered approach. One could buy some from the secondary market and wait for the government to announce its OFS, which the markets are expecting. So that is my take on KIOCL and NMDC.
I want to come back to you, Vikas, on this next one. We've got Ramesh, who has written an email to us, and he's got 100 shares of Bombay Burma trading at an average price of 1,495, he says, which means that he bought, if I'm not mistaken, he must have bought at the start of this year itself. but the stock has seen a little bit of consolidation after that point. Would you suggest that he hold on to his investment?
Yeah, Alex, again, hold on this company. It's giving him some gains already, but I would still maintain a hold on this company. It's a holding company of the Bombay Dyeing Group, and I think the valuations are pretty attractive when you compare it with the holdings which this company has. So I think one can certainly hold on to the stock.
All right. The next query is from Pawan, and he's saying that he has BHEL June 80 call. He wants to know whether he should exit now and re-enter if the earnings come good for BHEL, or should he continue to hold on to BHEL June 80 call. Kunal, what's your take on this?
Well, I'm not sure, frankly, because just around the results time, it's very, very risky to try and trade, options, and specifically for such high lot size kind of, stocks. It may work out to be more of a 50-50 trade. So if the results, expectedly come out good, then the stock may give you a rally. But somehow I am of the view generally that I don't trade on options or on future side specifically, just about on the results kind of time frame. But then I think if the viewer wants to hold on to the trade, then I would probably give maybe a stop loss of 73.5 to 74 on BHL. So if that level gets broken down for the stock in say over the next couple of days, then you might expect a sharper reversal on the downside for the stock. So it's a bit of a risky trade. But I believe that if you want to have a trailing stop loss, then closer to 73.5, 74 is where you can keep a trailing stop loss on BHEL.
Okay, Vikas, we had an interesting conversation on BNSN itself, and this was a fundamental conversation on the pipes segment. And we've got Anup Kumar who's asking about Prince Pipe for the long term. Would you suggest that this is the best buy in the segment, or do you think that another stock is better placed?
Yeah, Alex, Prince Pipes also is a good stock, but if one has a long-term view, I think my preference would be an Astral pipe or a Finolex pipe. They look to be much better than this company, although Prince Pipe also is a good stock and is doing well, but I think from a long-term point of view, one should look at Astral pipes or Finolex pipes.
Alright, the next viewer query is coming from Jyoti, wants to know about Reliance Industries, saying whether after such a long consolidation, can it show momentum from here on with the unlocking theme playing out? She's thinking of buying its June futures. Kunal, what's your take on Reliance Industries after a period of consolidation? Are the charts indicating that we could see some sort of an up move come in on this particular counter? Because Jyoti is thinking about buying the June futures.
So I think there are a lot of encouraging points, when you look at the charts for Reliance Industries. Now, the first is the very recent rally which the stock has shown. So every time when the stock had seen a rally, and I'm talking about the last 7-8 months specifically, it was more of a staggered kind of a move for RIL, where the stock took almost like, for example, 2 weeks or 3 weeks for the stock to rally 5% odd. Now, this time it's a bit different because you've seen that 10% move for Reliance Industries in just a matter of 4-5 trading sessions, and then the stock has graduated to a new level on the upside. So it's taking some time to break past about that 2,200, 2,250 zone very, very convincingly. The best part about the chart is the better nature of indicators as compared to the relative effect in the last 7-8 months. So the indicators, for example, the RSIs, etc., are poised at a much better level, more comfortable levels for the stock to graduate to a new highs for itself. So I think on all of those prospects, it looks very attractive on the charts. And if you have that risk appetite, I would suggest maybe a buy or a hold on Reliance Industries. If it's not June futures, then you may probably have to extend it by a month or so.
Okay, I'm coming back to you on this next question, Kunal, and this is coming in on Camlin Fine, and this is from Sandeep Surana. Sandeep has bought Camlin Fine at levels of 108. He's asking if we should book profit or should he wait for better levels going forward?
I think you can hold on to your investments. So you've made some fabulous money on your investments from 108, 110. The stock is now at almost 180 levels. So it's jumped up a good 65-70% from your investments. But what's been very encouraging point for a Camlin fan as well is that the nature of rally into the stock has been very, very slow and steady. The volume accumulations have been very consistent. So right from those October, November times, there was a patch when the stock moves up higher, and there was a good chunk of volume patterns as well, which came by for the stock. So that's again a good positive. It's holding on to the 50-day moving average. On all of those prospects, it looks very attractive. So if you are holding on to your investments, I would suggest hold on to it for say another 6 months to 9 months approximately, and you can probably look at even a 200 to 225 as a potential target range on the stock.
All right, the next query is an email query from Anil Kumar saying that he's holding around 200 shares of GNFC. He wants to know whether he should continue to hold on to this particular counter for a longer term or should he exit after a while. Vikas, I'll come to you. Anil Kumar hasn't mentioned at what price has he bought GNFC, but does it make sense to hold on to this counter for the longer term?
It certainly does. Cheryl, I'm bullish on the stock. It's a fundamentally a great company, and the valuations also look pretty cheap when you compare it with its peers. And it has monopoly in some of its products, which it makes around dominant 50% market share in that product. And most of the product which it makes are seeing a good demand, and the prices have also gone up recently. So I'm bullish on GNFC, and it is adequately reflected in the the quarterly results which the company declared. So I would suggest a hold on this stock.
Okay, we've got a question coming in on Firstsource, and I'm coming to you on this one, Vikas, because I think the question is primarily on the fundamentals. Prashant wants to know a very simple question: can he invest in Firstsource?
Yeah, Alex, it's a very good company to invest in, but the stock has gone up recently from levels of 110, 100 levels to 170. The quarterly results were also good, and it's a mid-cap IT company which is doing exceedingly well, and it comes from the RP Sanjeev Goenka group, which is doing really well in the market. Most of the group stocks are also doing well. So this is a good company from an investment point of view, but the only thing is he could use a staggered approach and use every decline in the stock to be as a buying opportunity. Long term, I'm bullish on the stock, and I think one could easily see levels of 250 rupees on the stock in about say 1.5 years time.
All right, the next queries come from Padma and saying that she has 500 shares of Indocount and 500 shares of Future Retail. Should I hold or move out of these counters? What's the outlook on textile-oriented companies with regards to as an investment theme as a whole? Vikas, what's your take on Indocount, Future Retail? Makes sense to stay put in these counters? And overall, what sort of an outlook you have for these textile-oriented companies?
Yeah, Cheryl, I'm bullish on the textile sector as a whole. I've recommended so many companies from this sector at pretty lower levels. On your channel also, I'd recommended Ambika Cotton, which was then prevailing or ruling around 600, 700 rupees, and the stock has done really well. Even Indocount looks very good, and it's certainly an investment-worthy stock. And since the sector looks promising, I think he or she should continue to hold on to Indocount. And as far as the Future Retail is concerned, I'm not very comfortable with that stock. Rather, I would recommend the investor to get into Gokuldas Exports, which currently trades at closer to around 140 rupees. I'm bullish on the counter, and I think we can easily see levels of 200, 225 in the next, say, 9 to 12 months on that stock.
Kunal, Abhishek wants to know about Tata Coffee. Should he buy today with a medium-term outlook, and what target would you give on the technicals?
So, looks attractive. Alex, Tata Coffee, the stock doing pretty well. Last 2 months, I think it's risen from 120 to 190 where it's currently trading. Looks attractive, but if you're looking for a fresh buy, then may not be a better, a best level rather to enter the stock at current levels. I would suggest that wait for a smaller dip into the stock, let it come by towards 165, 170. I think that could be a prudent, wait and watch approach, because that could be a better zone for you to buy, because, looking at the volume accumulation, the patterns on the stock, it's possible that some sort of a short-term cool-off can happen to the stock price.
The next query is coming in from Balan saying that he has about he has 1,000 shares of Oil India that is purchased at 98 rupees per share, 500 shares of ONGC that is purchased at 115 rupees per share. He wants to know whether he should hold on to both of these counters or sell both of them and switch to BPCL instead, or look to move out of the oil sector completely. Vikas, what's your take coming in on this? Oil India and ONGC is what the investment is the investment that Balan has. Should he stay put with this, or should he take a switch to BPCL or move out of oil sector?
Now, the stocks which he's already bought into, Oil India and ONGC, they are very good plays on the rising crude prices. And since crude prices have gone up recently, the stocks have also done well, and they would do further well from here. But if I were to choose between these stocks and BPCL, I think I'll go with BPCL, because although higher crude prices would certainly be negative for oil marketing companies unless they are allowed to hike prices, and the prices are already at lifetime highs. But still, I feel there is a very good trigger ahead. First, we can reasonably expect a hefty dividend again from BPCL because of the stake sales which they've recently done, and the stake in Petronet LNG which they are about to sell or offload before their privatization. And I am of the opinion that the privatization of BPCL will be at a much higher premium than the current market price. So I would recommend him or her to book profits in both the oil stocks which he or she owns and switch to a BPCL at the current levels.
Okay, gentlemen, small request. We've got about 4 minutes left on the query segment, so keep your answers short. Not asking you to not give your rationale, of course. We've got the next question coming in from Rajan, and this is for you, Kunal. Bought 300 shares of RBL Bank at 243. What is the short-term target that you would give for this stock, or would you suggest to move to another bank?
So I would suggest to move to another bank if it's very, very short-term, but if it's slightly positional and the viewer can hold on to say another 3 to 6 months, then there are better prospects which could emerge for RBL Bank. In fact, in that case, then I would also suggest maybe an averaging strategy if the stock happens to come back to that 205, 210 zone. So that's a good, a pivot zone for RBL Bank. From where it bounced off, it could probably settle back into a good, trending move on the upside. But specifically, if it's short terms, for example, the next 1 week or, then I don't see any major, kick, happening into the stock price. But if it could be elongated to at least another 3 to 6 months, then I believe that there is a better prospect for you to get good profits on your investments, specifically on RBL Bank.
Alright, the next query is coming in from Dhananjay. He's saying he has 800 shares of Coal India, which he's purchased at 152 rupees per share. He wants to know whether he should book profit, or does the stock have more scope of going up? Kunal, what's your take coming in on Coal India?
Well, I'm extremely bullish on Coal India, and I believe that the prospects for the stock are very, very encouraging. Technically, it's forming a classical inverse head and shoulder pattern, and typically, we see inverse head and shoulder patterns as more of reversal patterns. But for Coal India, it's more of a continuation pattern. So it's a rare kind of a chart pattern which you've seen on the stock, and I believe that the prospects over the near to medium term are extremely strong for itself. So I would suggest a hold on Coal India, and if you have a good appetite in terms of time frame, then I would suggest even an averaging opportunity if the stock happens to go through a mild correction. 180 to 190 is what I would place as a near-term target range for the stock.
Okay, coming back to you, Kunal, on Tata Chemicals, bought at levels of 800. This is Mihir, so slightly elevated levels, and he's seen consolidation after that. Should he hold on for 3 months? He's got a quantity of 4,000 shares.
Well, you should, I would suggest that the viewer should hold on to your investments over here. After a bit of a correction, Tata Chemical is making a comeback. So it had somehow left, was left out from the party in the last 2 months, from the entire markets. It's now trying to play a catch up with the overall market theme as well as the sector itself. So, if the catch up is, as strong as what we've seen in the last 9-10 months for the rally for Tata Chemicals, then it's possible that the stock may scale past about that 800 levels as well pretty quickly. So I would suggest maybe an averaging opportunity for Tata Chemicals and hold on patiently. I believe if you can bring down your average to say a 760, 765 approximately, then holding on for the next 3 to 6 months can probably yield you at least a 7 to 8% upside from your average investments.
Alright, the next query is from Bharat. He's saying that he has 50 shares of Edelweiss that he's purchased at 290.55 rupees per share, but now the stock is actually around 74 rupees per share. Wants to know whether he should continue to hold on to this particular counter or look to sell. What should he do, Vikas? Edelweiss, fundamentally, there's scope for this stock to come back?
Yes, Cyril, from among the broking stocks, this would not be my preferred bet. Although the investor has lost heavily on this stock and it would be painful for him to book losses here, but I think he should do that and switch to a stock like an ICICI Securities where I see tremendous opportunities going ahead. So my recommendation would be to book losses in Edelweiss and switch to an ICICI Securities.
Kunal, one last query and then you can move straight to the high risk and low risk ideas. Anup wants to know about Strides Pharma. Should he enter at this level?
Yes, looks attractive. In fact, I was looking at the charts for the stock today morning itself. It was giving, it was just about nearing a breakout, a price volume breakout for itself. So looks attractive. And if the stock rallies something to go by, then you can look at at least another 15 to 20% on the upside over the very near term. So it's a very zippy kind of a stock. You typically buy these stocks on breakout levels or on strong momentum. I think today is one of the day where you're seeing that stock exhibiting those kind of levels. In terms of stock specific, I would suggest two buy calls. The first one is from the IT pack. It's about TCS. The stock looking extremely attractive, and I would sense that the stock is now getting back its leadership quality on the short-term charts. Would head back. I would sense that stock would head back towards its all-time high levels of 3350. So would suggest that as a buy. Targets of 3350 approximately, and stop loss to be kept at 3200. And the second stock which I would suggest would be a buy on Biocon. It looks attractive on the short-term charts. Last 2 or 3 days, it's picked up almost 6-7% from its swing lows, heading towards a breakout of 200-day moving average as well. So this could be a double breakout for Biocon. Would suggest a buy in the anticipation, of the breakout of this 200-day moving average as well. Targets of 440, stop loss at 400.
Kunal, I promised Raghu that I would get his answer, if not yesterday, I would promise to get it today. So let me ask you on Galaxy Surfactants. Would you suggest a fresh entry?
Well, it's an okay kind of a chart, except done pretty well over the long term, but from a short term, it looks very, very, average. I think the stock looks to be more of a consolidation, to be gone into a consolidation. So I think if it's specifically a longer term kind of a query, then it could probably make sense to buy at current levels and then look to add on dips. But if you're looking for a good entry point, then I would suggest that hold on for the stock to come back towards its 200-day moving average. I think that level is at 2830, 2850 level. So let the stock cool off by another 100, 150 to 100 rupees. I think that's where it could be a very good entry point for Galaxy Surfactants. But I think on the long-term charts, it's a much more better opportunity. So you can buy at current levels and then look to average if the stock dips to the levels which I just mentioned.
All right, that's the take on Galaxy Surfactant, and also Kunal gave out his high risk and low risk ideas as well. Vikas, what are your high risk and low risk ideas for our viewers today?
Yeah, Cheryl, my ideas are long-term ideas, but they are low-risk ideas. So at these levels, both these stocks can be bought into. There are two quality mid-cap stocks. The first one is Huhtamaki India, which is an MNC company with a parent in Finland. It's a leading flexible packaging player in the country. It has marquee clients. It caters to almost all FMCG companies. The company has also started packaging for food and beverage segment, where I see tremendous opportunities ahead. And I think with the government's ban on single-use plastic, it would be very positive for a company like Huhtamaki PPL. Fundamentals are rock solid. In a normal year, the return on equity would be close to 24%. The debt levels are pretty low at 0.32 debt equity ratio. So I'm bullish on the stock at the current levels of 290. One should buy into the stock, and my targets are 375 in the next 9 to 12 months. The other stock again is a fundamentally very good stock. The name of the company is D-Link, which is again an MNC with a parent based in Taiwan. It's a global leader in networking equipments like routers and switches, etc. And they're seeing heavy demand because of the work from home culture and the lockdown which is there, and then the government's focus on digitization. And then I think there are talks that there could be PLI incentive scheme which could be announced for the telecom networking equipment sector, and that would be pretty positive for D-Link. And being an MNC company, the stock is very attractively valued at 12 to 13 times its last year's earnings. So I like the stock at the current levels of around 115, and my targets are 175 rupees on the stock in the next, say, 9 to 12 months.
All right. Thank you, Vikas, for that. And those were the high risk, low risk ideas coming in from both of our experts. Thank you, Kunal and Vikas, for joining us on the show, giving us your take on IPOs as well as resolving viewer queries and taking us through your ideas for the day as well. Well, on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
Co-powered by LG Air Conditioners, all in one in all.
He knows the market trends today and has mastered them over the last 15 years.